I'm joined now by Kunal Vora, Head of India Equity Research in BNP Paribas. Kunal, very good morning to you and thank you for speaking with us. Let's just come first to the auction data which has come through. Now, the auction wrapped up in about 2 days. Clearly, not too much of a demand there. And Jio, which is, undoubtedly perhaps the largest player, looking at the least bid. How do you stack all of that up? Let's start there.
Thanks for having me. So for this auction, we expected this to be a non-event, and it's played out that way. We've seen tepid participation, total bids of about 11,000 crore. This compares with almost 1.5 lakh crore of bids in the prior auction. In the prior auction, operators were still accumulating 5G spectrum. The excitement level was a lot higher. Over the last couple of years, what we've seen is 5G is not really lived up to the expectations so far, and operators are loaded up with spectrum. So the participation was restricted to the renewals, which couple of operators are facing, and they would taken care of that. They would added a little bit of more spectrum, but this really doesn't change the competitive dynamics in any way.
Okay, so this doesn't change the competitive dynamics. What next for the industry? I mean, we've been seeing a massive buzz in the last couple of sessions as well. And all of the hopes seem to be stuck on a possible tariff hike. Now that the auction is out of the way, Kunal, do you think that there is space, or there is now the time is right for those tariff hikes which have been long awaited?
Yeah, absolutely. Even we believe that a tariff hike is imminent. We've seen a couple of tariff hikes in the past. In 2019, we saw one. 21, we saw one. And expectation was that immediately after the election results, this is something which should happen. So we've been building in that tariff hike should happen around June, July, and that expectation still remains. The sector has done very well, partly pricing in the tariff hike that tariff hike should result in a fairly strong growth for this sector. This is one of the mass consumption category besides FMCG, and the growth rate which this sector can deliver, especially if tariff hikes happen on a 2-year basis, could be as high as 14-15%. This is much higher compared to what might be the case in case of other mass consumption categories. So, while the revenue growth could be in mid-teens, you could have EBITDA growth which could be even higher. Along with this, this sector also is seeing a moderation in CapEx. So we've seen for at least larger operators, 5G CapEx, initial CapEx is already behind now. So CapEx to sales should start moderating, and this should start resulting in strong FCF generation, deleveraging of balance sheet. And in this context, while this sector has moved up, we continue to find value, especially on the medium to long term basis. In the near term, I would not rule out consolidation, considering that there has been a very sharp rally across the stocks.
Let's do a relative comparison of the three players, and let me start with Vodafone Idea, because that seems to have the largest legroom to grow, and that's how the stock has also been reacting. As someone who analyzes that space and looks at it very closely, do you think that the turnaround has truly begun for a Vodafone Idea, and are you constructive on it?
Yeah, I don't want to comment on a specific operator, but the way I see it right now is that over the last 3-4 years, we've seen the industry continue to consolidate. The two larger operators continue to gain significant market share, and we believe that in the next 1 year or so, that trend is likely to continue. In the medium term, what you could have is a more balanced picture, wherein all three operators start reporting revenue growth and the market share starting to stabilize. But in the past, there have been significant differences in the kind of capex which the operators have done, and that's something which has resulted in the gaps in terms of market share. And we don't think that will get bridged. It's going to be two large players which will continue to dominate the market.
So two large players continue to dominate the market. So as far as a Vodafone or an Indus is concerned, just to talk about what the third player will look like, is there a limited headroom?
In terms of market share, we would say that there's a limited headroom because two large operators are not going to cede any market share. They've made massive investments, and they continue to make those investments. On the tower side, our view is different. I would not put the third telco along with the tower business. For tower business, there is a significant change in outlook over the last 3 to 6 months. What we've seen is there is a much higher expectation in terms of longevity of both the tenants now. You have settlement of dues with other vendors. and that should result in eventual settlement for the tower companies also. Post that, you will start seeing new business coming into tower companies, and this should help accelerate the growth rate. With the settlement of dues, you will also start having a reinstatement of dividends, which is one factor which is very important for annuity business like a tower company. So for tower companies, we are fairly positive right now because of the factors I just mentioned.
Okay. Kunal, I know we wanted to talk to you about telecom, and we've spoken in some detail, but since you are here with us, was keen to know your take on the big story this morning, which is what's happening with India Cements and Ultratech now taking 23% stake. That we know is clear. Who they've bought it from is not official yet. We're assuming could be from the promoters. How do you see that panning out for India Cements, for Ultratech, and then of course I'll come to the sectoral view?
Unfortunately, I don't cover cement, and I don't have any formal views on that, so I won't.
Okay.
I'll like have to refrain from talking about it.
Okay, okay. Fair enough, fair enough. And sorry to sort of
Yeah,
throw
no,
that
squeeze
on
that
you.
in.
Yeah.
So yeah, besides telecom, Kunal, what is, this is Niraj here, good morning. Besides telecom,
Hi, Niraj.
what is top of mind for you as you gaze the landscape? Anything, any thoughts that you can share with us?
Sure, absolutely. So I look at the broader consumption space. I look at India's strategy as well.
Yeah.
So from a consumption perspective, I did touch upon mass consumption. What we've seen over the last decade or so is mass consumption having struggled. And there is a little bit of a hope. I was in Hong Kong, Singapore, like last week. We had like a lot of discussions regarding whether we could see a revival of rural growth. In our view is that while there'll be a gradual recovery in mass consumption, we don't really see the kind of excitement prevailing like say a decade back when these companies were reporting double-digit revenue growth consistently. We believe that there are structural headwinds which mass consumption faces, which includes fiscal consolidation, larger focus on infrastructure. Many of these will continue. Having said that, we do believe that considering the large headroom which the government has this time in the budget, there could be a little bit of a stimulus. But even whatever stimulus comes, that will get distributed because there could be other takers. Telecoms could take a large tariff hike, and that's something which could take away at least $5-6 billion of additional spending from the consumer side. So on consumption, we believe that there will be a gradual recovery, but it might not be as sharp as what market expects. In that context, some of the excitement which we seen in these like FMCG stocks is something which we believe will get addressed in the next few quarters. We don't think the numbers will be as strong as what the market expectations are.
Okay, and since you cover strategy, Kunal, can't let you go without talking about a couple of things. So, are you anticipating a moderation in CapEx in this budget, or do you think a troika of decent CapEx, some bit of consumption focus, and fiscal deficit glide path can all coexist?
Yeah. So, like, if I look at this budget, government has a special larger than expected dividend from RBI. So they have a few options on what to do with it. They can stimulate rural consumption. They can spend on infrastructure. They can lower personal income tax rate, or they can pay down some debt. We believe that it will be combination of some rural stimulus and continued infrastructure spending. And that so fiscal deficit, the glide path from like going to 5.1 and going to 4.5, I believe it can still remain intact while without disturbing infrastructure and with some additional spending on the welfare schemes. Having said that, the welfare scheme spending, while it might increase a little bit, we don't believe it will result in any meaningful acceleration in growth for consumer staples.
Okay. Okay, Kunal, one final question from my end at least, and that is regards to what drives the market higher from here on. Private banks have just started making their presence felt, if you will, the last 10 days. Is it that bucket which takes it higher? Could IT make a bit of a comeback depending on how companies talk about generative AI? What is it that is the top weightage or top overweight for you?
Yeah. So financials happens to be a top overweight for us. We believe that there is value in large caps. We believe that mid and small caps is where there has been a frenzy. So we'll be a little more cautious there. In case of large caps, the returns have been driven to a great extent by earnings. Not that multiples are cheap right now. Multiples are about 20% expensive compared to the last decade average. But considering the strong fundamentals and like the very strong earnings growth which we are seeing, those can be justified. May not be so much of the case in case of mid and small caps. So, and in large caps, we do see private banks fundamentals to be fairly strong. We believe that while FY25 could be a little muted in terms of earnings growth, it's a sector which can provide like long-term compounding, and the entry points look fairly reasonable to us right now. We do like telecoms. We are selectively positive on IT services as well. Having said that, it's a sector which has disappointed in the past, but we believe the worst is behind, and the order books remain fairly robust. And like FY25 should be a better year compared to FY24.
Okay. Kunal, great having you, but we should talk to you more often. It was lovely talking today. Thanks for your time.